Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is what is it? It's Thursday, the 14th of December, 2006, and the market's just closed. And this is why you don't sell short stocks in an uptrend. As I've been saying, this market is innocent till proven guilty, as long as the 50-day moving average continues to rise. Now, the last week or two, it's been looking like maybe it was starting to distribute a little bit, more particularly in the Nasdaq 100. But these S&Ps broke past this resistance a week and a half ago. That resistance held as a support this week, and the bull market is doing what it's supposed to do in an uptrend. That is, higher highs and higher lows. We had a little bit of a shakeout yesterday, and that often clears the. 2 days ago, and that often clears the way for a continued rally. We've been eyeballing this resistance at 142.30, and sure enough, as soon as the market got above that, the shorts got another beating. So today is just another continuation in the uptrend day. And as Matt pointed out, I'd like to say a lot of times that news and surprises tends to follow the direction of the trend. And that's why even when we see signs of distribution on the shorter term time frames, that we still have to revert to the bigger picture trend. And the bigger picture trend continues to be higher in the Nasdaq 100. We've been looking at these, the 10 and 20 day crossing back and forth, indicating possible, and I've said that possible distribution, but as long as support held, that was the important thing, $43.30. As long as that support continues to hold, this market should be considered innocent till proven guilty. And the short sellers, they get exactly, I guess they get what they deserve to sell short in a primary uptrend. The 30-minute time frame here, actually. 30-minute time frame still kind of sloppy in here. I mean, we've got this resistance at 44.50. Let's back that up to an hourly time frame so we can get a little bit more clarity. We've still got this 44.50-ish area that has been resistance for the last couple of weeks. So maybe we need to pull back a little bit, then break out. I don't know, but it's still looking sideways for the Nasdaq. So we're still within this little trend. We've reached the high end of the range, and nothing's really changed for the Nasdaq, except if you were long it, you made some money today. So, but it's just back to the top of the range. So nothing really to get too excited about in the Nasdaq. The semiconductors, they recovered somewhat today, but they did close below that 50 in the 200-day moving average once again. And yesterday we saw that this trend line break might have sucked the shorts in. Who knows? But bigger picture again is a more neutral market here with support down near 32.75, resistance up near close to $36 a share in the semiconductors. But when you look at the shorter term time frames, there's still some good moves possible. Now we've got this 5-day moving average flattening out, so perhaps we're going to head back up to the top end of this range and test that 35 level once again. As you recall, that 35 level had been support back in mid to late November, and then resistance earlier this month. So perhaps we're headed back up towards that level once again. Looks like the resistance right now is at about $34.40. I think clearing that would probably bring us back up to the 35 level for the SMH. The mid caps, I've been saying, have been showing the most relative strength in this market, and it's just been a picture perfect higher highs and higher lows. We don't have a higher high yet, and that's not really reason for concern so much, but just as something to keep an eye on here. And that's something that, we see that the market came back up to that 150.25 level. It did rally nicely, though. Yesterday I'd said, looks like 149 is the number this market has to clear for the buyers to take control of the short-term trend. Well, above 149, that's where we had that move straight up to where you might have expected to find some sellers near that 150 level. Now, we've got a little bit of sell-off here late in the day. I don't think that's anything to really worry about. But right now, I would say support is 149, resistance at 150.25, and getting back above that level paves the way for more higher highs. Let's take a look at the stocks we've been mentioning lately. POM, we had gotten involved in this one yesterday at $26.40. Was it yesterday? It must have been 2 days ago, I guess. I don't even know. I've got us in at $26.40, and our stop was $26.51. I would say on that right now, let's go ahead and raise that stop up to $26.68. and I'm just going to write that down here. Gateway, I had mentioned that one near the $2 level and suggested that if you were in it, I wasn't, but we'd mentioned it over here, and I'd suggested if you were in it to put your stop at about 213. Pretty sharp sell-off in Gateway, came down and took you out, but a nice percentage move anyways in Gateway. IIJI, this is Internet Initiative Japan. We got involved at $9.15 the other day, and we put our stop at $9.20, so we're stopped out with a nickel gain in there. We got stopped out of AMD yesterday, but look at this. I mean, this is, it's easy to say, oh, darn, I wish I didn't get stopped out right there because it continued lower. But getting stopped out right there is much better. It's a discipline, and honoring your discipline keeps you from experiencing big losses like this. Clearly, I think some shorts got squeezed very hard today in AMD, and it's nice to be able to participate on the short side and listen to the message of the market. When the market tells you to move out, that's when you move out. Forget your opinion and continue to move on. We'd also been looking at Exxon Mobil, and Exxon Mobil, boy, this one sure did go good. We were looking at this inverted head and shoulders pattern, and we didn't get an official buy yesterday because of the gap open. I bought it yesterday at 76.02. Thought I was a hero because I sold it up near 77.20. But boy, that thing just kept going really nicely, well past our target of $78 a share. If you held it, congratulations. Nice, great move in Exxon Mobil. And this just goes to show you that, I had said I was going to show you this stock that George Soros was involved in, but instead we're going to look at Exxon Mobil. The one that George Soros was involved in was Bluefly, and Bluefly was a nice play today above this $120 level, but it completely failed. You were probably better off in Exxon Mobil unless you're an aggressive trader. Even better yet was to be involved in both of them like I was. Royal Gold, RGLD, is a stock we had gotten involved in yesterday at $33.15 down here after the little pullback. So nice entry there. I would say in this stock you want to put your stop now at $33.70. And then we also got involved, let's see, Apple today, AAPL. What we were looking for, and I'd said, it sounded like a deep pullback, but it really wasn't that deep. We were looking for a pullback down to 88.35. That's this level right here. It actually made it down to about 88.27. So we were then going to buy strength on this stock above 88.50, 88.50 being right here. And then we were looking for a price objective about 90.25. Well, I made it up just about to 90. Hopefully you raised your stop intraday and got stopped out here, I think, worst case. If not, you need to practice your trading skills. There's no excuse for letting more than $1 profit turn into a break even or a loss. So I'm not going to update Apple anymore. If you're still in this, I'm going to say you didn't. It's probably a break even is what I'll take credit for, but it should have been a lot better than that if you have any trading skills whatsoever. Goldfield, symbol GFI. I had suggested we want to see a pullback to $17.90 in this stock, and then to buy it above 18.05, so involved right there. I think in Goldfields, you can put your stop, let's say, below this level. Let's say break even in GFI right now. RRC, this is Range Resources, and we were looking for a pullback to $30.15 today. We didn't get it. The low of this pullback was $30.16, so there was no official entry in RRC. And NIHD, this stock, we were looking for a rally and then to sell it short on weakness. That never occurred, so no trade taken in NIHD today.